Okay, we're back, and this one's going to be a single segment area dealing with one specific issue, and that has to do with some changes in the code that we don't really get a lot as a result sometimes of a specific court case. But this one, you probably know the name. This has been he was in the news regarding this court case. You can do a Google search if you want to do it. Please don't do it now while I'm talking though, but you can do it on, you can find this information. It's still out there, it's important. Rick Warren was the pastor of Saddleback Church, and or still is, I think, but was at the time that took place. And if you remember, he was also an author, and he wrote a Purpose-Driven Life and other things. So he was clearly someone who's in the news. And what happened was that when he filed his tax return, claimed a very large housing allowance for his home. It was a very nice home. It wasn't like extravagant, but it was a very nice home. And as a result, the IRS felt that the amount that he used for his housing was simply too much. And as a result, they disallowed some of it using a clause called the rental value. And we're going to talk about it. The problem was the Internal Revenue Code never had a provision in there that talked about it, but the Internal Revenue Service imposed their own opinion of it. So what I'm going to do is I'm going to show you two things. I'm going to show you the code section as amended as far as just some information about it, and then I'm going to show you the court case, some of the key highlights of it, of how this actually worked out and how we still have problems with it today. So this isn't something that's totally gone away. But the code history, and I normally tell my students when I teach tax is that even the history of the code I'm not excited about, but this one I basically am. This is dealing with 107, which is what we're looking at. And it says in 2002, PL stands for Public Law, 107 says the 107th session of Congress, and 181 stands for the number that act was during that year. So you're learning all kinds of stuff here. Section 2A added, okay, and to the extent such allowances does not exceed the fair rental value of the home, including furnishings, appurtenances such as garage plus the cost of the utilities, before the end of the paragraph. So all of this stuff here, this was the new stuff that was added. And I've been talking about this up to this point in time, but prior to this date, this didn't exist. And this was going to be effective for years beginning after 2001, so basically for the 2002 year and on. So that was a code change. And the law was called, oh golly, what was it called? It was a specific act that was passed, and it was like clarifying the rental value for clergy or something like that. So I mean, it wasn't like an ominous tax bill that you never really knew the name of. It was specifically geared towards this provision. And so what is sourced from, largely, is Rick Warren versus the commissioner. And this was first heard in a tax court, and then actually went to which is right here. And then there's another provision that went to the Court of Appeals dealing with the constitutionality of housing allowances. Don't read through that one. That I don't think is important, especially for today. So what we have in here, and I'm just going to do the head notes first and then just a couple specifics in here, is that the ordained minister and wife could, big word, could exclude from income, not from self-employment taxes, but for income, under Section 107, paragraph 2, the amount of the church housing allowance they used to provide a home, and not the lesser of the amount that would have been the fair value. Code section 107, blah, 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 wasn't dispositive, which means that it didn't provide what the IRS was looking for. And that 107.2 clearly wasn't limited to rent payments where expressed that the rent to provide a home, blah, 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 as part of the compensation, etc. So basically, the IRS lost in this case, which the IRS never likes to lose in this case, but it was a big case and an important one.